Bitfarms, once one of the continent's biggest Bitcoin miners, just announced that it will completely exit Bitcoin mining by 2027. Over the next 2 years, the company will phase out its entire fleet of ASICs and convert its 341 megawatts of contracted power spread across Canada, the United States, and Paraguay into high-performance computing and AI data centers. The numbers explain everything. In the third quarter of this year, Bitfarms posted a $46 million net loss on $56 million of revenue. The April 2024 Bitcoin halving cut the block reward in half. Network difficulty is at all-time highs, and electricity still accounts for up to 90% of operating costs for most miners. In short, the economics of Bitcoin mining have collapsed for a large part of the industry. Meanwhile, the economics of AI infrastructure look almost too good to be true. Long-term hosting contracts for NVIDIA H100s, GB300s, and future generations routinely deliver 10 to 25 times the margin of mining, with utilization rates close to 100% and revenue locked in for 5, 10, or even 12 years. Bitfarms is not alone. Core Scientific recently signed an $11.9 billion deal with CoreWeave, an OpenAI infrastructure partner. Iris Energy is deploying thousands of GPUs this year. Hut 8, Cipher Mining, and TeraWulf have all announced major AI pivots or hybrid strategies. What these companies have that hyperscalers desperately need is immediate access to large blocks of low-cost power and facilities that are already hardened for 24/7 operation. Building a new AI data center from scratch takes 3 to 5 years and billions of dollars. Retrofitting a Bitcoin mine can take months. The first concrete step for Bitfarms will be the complete transformation of its Washington State site into an 18-megawatt NVIDIA GB300 cluster with liquid cooling, scheduled to come online by December 2026. The company has already secured a $128 million equipment contract and expects the facility to achieve a power usage effectiveness of between 1.2 and 1.3, which is elite-level efficiency. Investors have noticed Bitfarms shares jumped 15% on the announcement, and many former mining stocks are now trading as pure AI infrastructure proxies. Of course, risks remain. GPU shortages, potential regulatory pushback on power consumption, and the possibility that a prolonged Bitcoin bull market could tempt some operators to delay their exit. But the direction of travel is unmistakable. The same industrial-scale power contracts that were built to chase Satoshis are now being repurposed to train the next generation of artificial intelligence models. What we are witnessing is one of the fastest and most capital-intensive sector rotations in recent memory, from cryptographic proof of work to the physical infrastructure of machine intelligence. If you found this analysis useful, please consider giving the video a like, leaving a comment with your thoughts, and subscribing for regular updates on the intersection of energy, computing, and money. Thank you for watching.